I'm going to speak about HDFC capital risk, and myself and Sumit Jaiswal are doing this. Now I'll just brief you through the contents of the topic. First it will be like terms, then capital structure, then details of Tier 1 capital. Then after that we'll be discussing about details of Tier 2 capital, then capital adequacy and capital adequacy of HDFC and now I'll brief you about some of the terms in capital risk. And capital risk is mainly classified as individual risk and corporate risk. And in individual risk, risk by which he or she may lose all of the principal amount which they have invested. And corporate risk is when a company faces the risk of losing its capital. And capital adequacy ratio is the ratio of the sum of Tier 1 and Tier 2 capital to that of risk-weighted assets. And now that we have seen the basic terms on capital risk, we will take a look at the capital structure. Capital structure is mainly classified into Tier 1 capital and Tier 2 capital. And Tier 1 capital is the capital which is readily available to protect the unexpected loss. It is also called the core capital. And Tier 2 is which is second readily available to protect the unexpected losses. And Tier 1 capital consists of paid up capital, statutory reserves, then other disclosed free reserves, then capital reserves. Capital reserves are the surplus generated from sales of capital assets. And whereas in Tier 2 capital, the Tier 2 capital consists of undisclosed reserves and paid up capital, and then revaluation reserves, then hybrid capital, then subordinated debt, and also general provisions and loss reserves. And now that we have seen what is Tier 1 capital and Tier 2 capital, we will just get to the details of Tier 1 capital of HDFC Bank. And herein the paid up share capital and reserves and innovative perpetual debt together constitute a gross Tier 1 capital of 28 lakhs and 119,098 rupees. And whereas the deductions, that is the deferred tax assets and securitization exposure together with the investments in subsidiaries and total deductions, they together constitute an amount of 26,252 and 61 rupees. And the Tier 2 capital of HDFC Bank will be explained by my partner Sumit Jaiswal. Thank you.
Now this Sumit, as Sujit spoke about capital structure of HDFC Bank and the details of Tier 1 capital of HDFC Bank, I'll be speaking about the remaining parts and the details of Tier 2 capital structure of HDFC Bank according to the Basel III norm. It consists of upper Tier 2 capital, lower Tier 2 capital, general provisions, investment reserve account, securitization exposures, investment in subsidiaries. All this together comes around 11,67,094. This is the Tier 2 details of Tier 2 of HDFC Bank. Now, as we have seen the capital of Tier 2 city of Tier 2 of HDFC Bank, now as we know that every bank capital is made up of shared capital, reserves and series of dated capital instruments which are divided into the lower Tier 2 and upper Tier 2. Shall be telling about what is lower Tier 2 capital and upper Tier 2 capital. First, upper Tier 2. Upper Tier 2 mainly consists of perpetual deferrable subordinate debts, evaluation reserves from fixed assets and mainly general provisions. And now lower Tier 2. Lower Tier 2 capital is relatively standard in form and cheap for banks to issue. Basel Accord states that only 25% of a bank total capital can be lower Tier 2. So the capital in the lower Tier 2 are generally easy for bank to issue. So mainly bank focuses on lower Tier 2 capital. Now some of the important things which both upper and lower Tier 2 capital consist of. First, upper Tier 2 capital. Upper Tier 2 capital we see of HDFC Bank is 3,90,565. So out of this, the total amount is outstanding is 3,90,565, and out of those amount the money is raised nil, and the amount eligible to be reckoned as the capital fund is the same as the total amount outstanding. And we see the second part, the lower tier 2 capital. The total amount outstanding is 6,98,100, out of which the amount raised during the period is 3,65,000, and the amount eligible to be reckoned as capital fund in the lower tier 2 capital, which remained after amount which has been raised from the total amount standing, comes around 6,28,120. Now, as we have seen the capital structure of HDFC Bank, I'll brief you about the capital adequacy, what capital adequacy covers, like credit risk, market risk, and what are operational risks. Credit risk generally arises whenever a borrower is expecting to use future cash flow to pay a current debt. The risk of loss of principal or loss of a financial reward stemming from a borrower's failure to repay a loan or otherwise meet a contractual obligation is known as capital credit risk. Next is market risk. Market risk is generally day-to-day potential for an investor to experience losses from fluctuation in security prices. The market risk is mainly happen on day-to-day basis. The next is operational risk. Operational risk is the risk remaining after determining financing and systematic risk, and includes risks resulting from breakdowns in internal procedures, people, and systems. Now we have seen what is capital adequacy and what is credit risk, market risk, and operational risk. Now we'll see this capital adequacy in HDFC Bank. First, credit risk. The credit risk of HDFC Bank comprises of portfolios and securitization exposure, which comes total around 18,18,562. Next is market risk of HDFC Bank. Market risk consists of interest rate risk, foreign exchange risk, and equity risk, which comes total of around 59,560. And next is operational risk. Operational risk consists of basic indicator approach, Tier 1 capital ratio, and Tier 1 capital ratio. And the total capital ratio is 16.53%, and the basic indicator approach is 1,86,762. So these are the things we covered in the HDFC capital risk. Thank you.